Commercial real estate. Been hearing a lot of buzz about commercial real estate, which is very apropos. Good vocabulary word for the day, apropos, uh, because it's real estate month here at the Wisconsin Veterans Chamber of Commerce. And when there's buzz in business and investing and money making opportunities, anything that has to do with the business world in the state of Wisconsin, we are there. So there's a lot of buzz about commercial real estate, uh, investing, acquisition, a potential corporate mass exodus from office buildings, and then exodus into industrial commercial real estate. And there's some weird things that are happening, which is my understanding. I'm not a real estate expert, definitely not a commercial real estate expert. But as is our common practice here on Office Hours Live, we bring in people that know what they're talking about so we can give you the valuable information right from the mouth of a subject matter expert, and today is no exception. Adam Matson is an expert in commercial real estate investment. He understands the industry, the ecosystem, where we're at right now, what makes right now different. Is now the time to invest? Is now the time to take a chance? Do you need to buy a multi-unit property? You need to buy an office building for your business or program? Or is now the time to sell? What are the red flags? There's a lot of information out there. Wherever there's buzz about something in the business world, there's information, and then there's misinformation. And there's bad information and predatory information. So, like, how do you know what's good? Like, what are the red flags? What are the green flags? What do you need to look out for? What even is commercial real estate investment? Who knows? But we're gonna find out. And we're gonna find out right after this. I love that song. Gets me pumped up every time. Welcome if you're watching on Facebook, LinkedIn, YouTube, Twitch, or some other platform. I don't know how you'd be watching on some other platform. That would be weird. But if you are, would love to have you throw some comments in the comment section. Say howdy. Give a shout out to Aaron Rodgers and the Green Bay Packers for their outstanding performance on Monday night. Do whatever. Say hi. Tell me you like my shirt. I don't know, whatever. Just say howdy. But if you have questions for our expert, Adam Matson, about commercial real estate, anything that's in your noggin, you want to throw it our way, we'll be sure to answer it live. But you didn't come here to hear me talk. So, Adam, how you doing, my friend?
Hey, I'm good. Thank you for the invite. I really appreciate it.
Yeah, you betcha. So tell us a bit about yourself. Give us the cliff notes on Adam Matson's life up into commercial real estate, and then tell us what is commercial real estate.
Sure. Real quick, part of the reason I got in the show, right? I spent a few years in the Coast Guard. While I was doing that, I was in college, fell in love with the commercial real estate world, jumped into the reserves with the Coast Guard, and essentially here we are today with all this gray hair I have. You would never know I've been doing this for 16 years.
People don't believe me when I say that you and I are in a very similar situation because we're both blonde.
Right.
You can tell with your lighting a little bit better, but we have very similar colored hair. I say, like, I'm straight up going gray, especially since the pandemic shutdowns. Like, right. I'm straight up going gray, and they're like, no, you're not. It's like, I am. You can kind of hide it because we're blonde, but we notice.
Right. It's there. It's like, where'd this come from?
Yeah, we see it. We notice it. Sorry, I total sidetrack there, but so you're a veteran. You get into commercial real estate. What brought you to commercial real estate? What excited you about it?
Oh, man. So I never understood. I came from a small town. I threw hay bales, right? So I didn't understand how the world worked. And I got to tour a factory in one of my classes. And it was absolutely astounding seeing how product was made, right? And then you tracked just a simple fork goes through 4 or 5 different factories to get done. Someone processes the raw materials, it goes to a distributor, and then it goes to the manufacturer who stamps it out, and they send it to another distributor, and it goes somewhere else. And it was so interesting following that chain. And in that chain, there's 5, 6 companies that all need a building. They all need a facility. It just seemed like a fun career to learn about how the world works. And there's quite a bit of money in commercial real estate. So the two just tied together, and it's just kind of an exciting avenue.
So it was supply chain that got you into the idea of commercial real estate.
It was, and it wasn't directly, it was completely indirectly, but like I followed the supply chain and I saw all the pieces in it. I'm like, this is just astounding.
Yeah. How cool is that? So for a complete novice, let's pretend that I'm a complete novice. I am actually a complete novice. What is commercial real estate, and what does the average human being need to know? Or maybe what does the average human being misunderstand or not know about it? What do you want the world to know from the bottom up?
Yeah.
What is commercial real estate investment?
So commercial real estate, everyone says, oh, commercial real estate. They think of a Starbucks or a McDonald's or a little retail center where you walk and you shop. That's actually one of the smallest pieces of commercial real estate. It's a great piece, but it's one very small. So in commercial real estate, we have apartments, we have offices, we have retail, whether it's a Best Buy or a mom and pop, coffee shop, and we have industrial. And all of those are tied into commercial, and each of those is its own little entity. Now we also have investment, which can tie all of those together at once. So it's the commercial real estate world is absolutely giant, and everyone tends to piece it in just one little small piece of it.
So are you managing buying, selling, building, acquisition, investment, kind of all of those pieces of how people get into and get out of, or build and get into commercial property then?
Yeah, correct. So as a company on the whole, we do everything. As an individual, I do the investment sides. Typically, my investments are going to be office and industrial are the ones that facilitate. And I hired out other brokers for the rest, so we can definitely get into those. And then we also bring in developers. Our old company developed probably 6 of the business parks in Wisconsin. And we currently work with developers across the country to come to Wisconsin and take over farmland or knock down old buildings and, for lack of a better term, put up an Amazon, right? So we get rid of everything. We bring in the sewers, the gutters, the roads, and we find developers to put a facility on top of it, and we help them find tenants.
I've always been curious, especially when it comes to, business parks or like multi-unit commercial properties. Like, what comes first, the chicken or the egg? Do you find a property and you say, this could be great, very marketable for, 5 businesses. I'm going to level this. I'm going to build a multi-unit, commercial property. And then you just wait for people to flock to you? Is it like if you build it, they will come? Or do you have to do a lot of networking on the front end to make sure that you have at least some verbal commitments on the front end? Or does everybody say, like, I need you to build me something, and you make that happen?
God, that's a great question. So let's skip the last 18 months, 12 months even. If you were in Des Moines, if you're in Chicago by the airport, Indiana, Georgia, Houston, you build it, they come, right? No question. Your building goes up, someone just fills it. In Wisconsin, we tried that, and it's been a very tough experience. So we've had a lot of companies that would build a facility. They would key in the local government. They would question their current tenants. They would talk to the brokers and make sure they got main and main, right? And then they would build it, and they would fill up almost instantly. We've had so much demand in the last 18 months, purely based on internet resale, right? Amazon, Wayfair, different distribution type facilities, that now we have such a lack of space. We're at less than 4% vacancy. Think of our vacancy rate like unemployment. Either the buildings don't work, they can't work, or they're overpriced. So we are so low that now companies are going to these big developers, say, I need 300,000 square feet. Where can you put me? General Mills is a great example. They're leaving a second tier facility down by the airport, and they went out to 3 different developers and tried to find out who would put the best building together. And a developer called Scannell found a site that We Energy zoned, and they're building them a new facility.
And now you're talking about 4% available industrial facilities for people to occupy?
And we have 330 some million square feet in the state of Wisconsin, or the 7 counties down here, and only 4% of it is available.
Holy moly.
Yeah. I think back to 2010, we were at the best was 7%. Most of it was 10 to 12%.
Now, does the same hold true then for storefront commercial properties?
And that's where we flip.
Okay.
Office, we're doing an absolutely terrible job of tracking it because we don't understand right now. Right now, there's companies paying on vacant space with all the employees working from home.
Right.
Our track set in office, which this is very interesting for some of your groups. Right now, there are probably 4 different office buildings that are vacated and developers have under control to turn into apartments. So we're trying to find a way to adaptively reuse these office buildings because depending on your market, we're as high as 17% vacancy in office.
Very interesting. Okay, so we're filled to bursting with industrial storefronts right now, or office rather. We're having that mass exodus that everybody hears rumors about.
Exactly.
Now, what are the long-term? I can see the repurposing of those office buildings. You see it a lot with, 10 years ago, people may not have wanted to believe it, but the American Mall pretty much died with few exceptions. And you see a lot of those. Southeastern Wisconsin, a great example, that mall downtown. They started putting residential apartments in there. It's like you walk down the mall and there's somebody's apartment there. And that's people are renting those properties. People are occupying those spaces. So I see the repurposing. Is there enough demand for, let's say, apartment dwellers for a repurpose of, the old US Bank building downtown in Milwaukee?
Right now, there is.
Or not US Bank. I'm so sorry. The old BMO building, the one next to the, you know what I'm talking about.
Right next to my office, right downtown.
What is the name of that building? Somebody's got to tell me. It's by the theater. Oh, that's going to drive me nuts. Just down the road from the Fonzie statue. Come on, people, help me out. But okay, so with all of those vacant offices and, people that are lapsing on their leases and not renewing, big corporate entities that have been here for decades and decades and decades, is there enough demand to fill repurposed space like that?
Right now there is. And we're finally, I say finally very negatively, right? Because as brokers, we don't want this. We're finally seeing a little pullback in the office market. There's a few large investors that are nervous about putting more apartments in downtown Milwaukee. So where are they looking? They're looking in Brown Deer right now. They're obviously looking Pewaukee, New Berlin. Everyone's looking there. We do have a shortage of apartments in Wisconsin, but our downtowns, even downtown Racine, they've done adaptive reuse of 2 giant manufacturing facilities. Kenosha's had some, and Milwaukee has seen that as well. Investors are slowly getting out of the downtown areas and only looking in the suburbs.
Now, is this just the pendulum swinging very far to the other end? Is there going to be an equilibrium reached, or are we still approaching what will be the new normal post-pandemic, or does nobody have a stinking clue right now?
What a good question. So one of our competitors, CBRE, they are one of the best in the world, and their lead economist was at a big conference. Said, "Look, I think the bubble is going to burst." And he goes, "But I've also told you that for 4 years, so I don't even want to listen to myself." And he's one of the most renowned individuals when it comes to trying to forecast these things. He's stated that we might be in the new normal. Of course, there's going to be people that go too far, right? In Kenosha, we have finally watched a slowdown of development. There's almost 1 million square feet vacant in Kenosha because too many people built. However, they are filling back up. So we're again starting to watch companies put dirt under contract and start working with municipalities. So somebody somewhere is going to be stuck with it because it's who got in first and who got out last, right? We will overbuild. We always overbuild in Wisconsin. And it's because right now everyone's coming to Wisconsin. Most of our investment product is not Wisconsin buyers anymore. We're selling to a bunch of companies off the coast. They're called REITs, real estate investment trusts, and different groups like that. Because in California, the rate of return can be anywhere from 0 to 4%. In Wisconsin, we're anywhere from 4 to 8%. So they can make a huge return coming here. And a lot of them can't forecast things. So they're going to get stuck with it if they push too hard.
Interesting. So it really is. I mean, if you know the answer without any shadow of a doubt to the question that I asked, you could probably become a very wealthy person because you would know exactly where things are headed and what to invest in and what to liquidate and whatnot. So if I'm average Joe, or veteran average GI Joe, get it?
Love it.
Yep. Average GI Joe over here saying something's happening in the commercial real estate market. I got some stuff laying around. I got some money to invest. And I come to you, obviously, in this situation, not giving financial advice to anybody. This is purely anecdotal.
Mm-hmm.
Don't want to get anyone in trouble here. But what general advice would you give to me, being someone, excuse me, who thinks that this is something that I want to get in on? Or should I just sit back and wait and observe? And if that's the case, what should I observe?
Good question. And I'm a perfect example of this. I'm very conservative. I want high returns and I want to sell even higher, right? So for the last 2.5 years, I sat on the sideline and it never changed. So me and my partners have started buying again. What I would tell you is let's be careful about our asset classes. So let's walk through it. Apartments, you're going to fill it, right? It doesn't matter where your apartment is, you're going to fill it. And the returns are very similar across all asset classes. What changes? The amount of work you're going to put into it. You will get a call at 3 a.m. or you have to hire a property management company, which magically they eat up all of your profit, right? So you can own an asset and just depreciate it over time and pay off debt, or you can manage it and it's very intensive. So you have to be ready for that. Now let's go industrial. We have an average fill time of 3 to 6 months. That means if there's a vacancy, you're going to hold that vacancy for 3 to 6 months. Retail is very similar as long as it's placed in a good location. Office right now, our vacancies can be over a year. So you're going to get deals in the office side. If you have a pile of money, you don't know what to do with it, call one of us first and we'll help you. But if you don't want to talk to one of us, there is money somewhere to be made in office, because a lot of these tier 2 and tier 3 office buildings, so let's think it's not a gorgeous little tower, it's just a building, they are selling for discounts right now. Retail, if you are off Main and Main, for those down here, if you're off Moreland and Blue Mound, or if you're off Main and Main, they don't have the demand right now. We have seen some discounts on it, but there's still tenants looking, right? Because they've lost employees, they can move finally because their audience, their base isn't traveling as far, right? So because of COVID, if you were in Brookfield, you still went downtown Milwaukee. Now, with all the different requirements, it gets confusing. Brookfield residents aren't going to Milwaukee anymore for lunch and for dinner. They're going right outside their block, right? So we're seeing a shift of how retail's focused. So that's another spot to get into. And right now, the darling of commercial real estate is industrial. So the prices are high, but we have not seen a lack of demand. And for timing, what these are called is they're called a triple net lease, right? So you own it, your tenant pretty much does everything. A light goes out, shame on you, fix it, Mr. or Mrs. Tenant. Your plumbing's busted, that's cool, that's your job as well. So you make a little less return sometimes, but you put almost no effort into it. So really, we got to break down what type of return you want and how much effort you want to put into it.
Let's say I have sitting in my pocket $5,000. Am I not even in the ballpark to be able to invest and or see a profit out of the world of commercial real estate? Does it need to be more like 50 or 100 or 500,000? Like, how much do I need in my pocket to get started in this world?
So great question. The world's changed for the stock markets, and there are a bunch of groups that are catering to that person with $5,000. They are buying phenomenal assets across the country. They're buying 100 million, 200 million, 300 million at a time, but they're allowing you to put in $1,000, $2,000, $3,000 and take a part of their share. You might make 7% return on that, 5%, fine. But you're able to get into some of these things and be an investor per se, but someone else is handling your money. Right. If you are going to do this alone, you need at least $50,000 minimum to buy a commercial property. it's going to be probably 20% down if you're lucky, but it could be 25 or 30% down. The other challenge is it's not like a house. Every 3 to 5 years, you have to get another mortgage. So a lot more goes into it. So for
Explain
50,000,
that part. Why would I need another mortgage on a commercial property in 3 to 5 years? Isn't it mine?
no. So yeah, good question. So like a house, right? You typically get a 15 or 30-year mortgage.
Mm-hmm.
On a commercial property, we break it down similar. So usually it's a 20-year payment plan,
Mm-hmm.
but every 3 to 5 years, you have to go and renew it. And they're going to get a new appraisal on it. What if you lost your tenant? If you lose your tenant, your property's worth a lot less, right? If you grabbed Amazon as a tenant, your property's worth a lot more. So every 3 to 5 years, you have to go out and essentially get a new mortgage. You can stay with your bank or get a new bank.
And so you have to renew it then? What
Yeah,
happens
go ahead.
if you're unable to do that? Let's say I fall into some money and decide that I'm going to build the Northwestern Mutual Tower down in Milwaukee. And after 5 years, I don't have enough money to maintain that large, beautiful property. I've lost all of my tenants and blah, 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 blah. Am I selling now?
You should have sold a year before that.
Right.
It's 2010 all over again. That's exactly what happened.
Mm.
That's what happened in 2010 is all these people had piles of money. It was easy to get. And when their loan period ended and they had to refinance, the bank terms changed and they couldn't refinance. So the bank took them back and they went on the open market.
Whoa. Okay. Well, that's good to know. And when you say 50,000 to invest in this commercial property, you're talking like in pocket, that is your down payment. So your total investment, you're looking at a minimum of $250,000, or like signing on the dotted line. And with the knowledge that 3 to 5 years down the road, you're going to need to be in a position where potentially your mortgage increases quite a bit.
Possibly. So real simple. What we're going to do is something called a cap rate, right? So that's a rate of return. So a 10% cap rate is the same thing as I want 10% in the stock market. If I spend $1 million, I'm going to make $100,000 a year. If I spend $100,000, I'm going to make $10,000. That's called the cap rate. And that's how these are valued by the banks. So in 5 years, if we buy that $250,000 building, right? 50,000 down, 25%, 20% is a $250,000 building. If your tenant goes away, you have no cash flow, zero. So they're going to base it on the bricks and mortar. Then they're going to give you a deduction for a holding period of 6 months. Then they're going to look at your credit, and then they're going to see if you can actually afford to hold it. So that's where your risk comes in. Now, if your tenant's still there, we're going to do the cap rate, and we're going to say, hey, this building's worth $400,000. You're great. Here's your refinance terms. You're good to go. So your risk is if your tenant leaves.
Got it. Well, that makes sense. So obviously with all of this opportunity out there, because anyone can sense that there's something happening. There are opportunities. Nobody knows exactly what those are, but for those that are willing to accept some risk, there could potentially be opportunities there.
Big time.
Wherever there's opportunity, there's always someone trying to take advantage of the climate and to take people's money and to scam people or to be predatory or to get a cut of somebody else's labor or efforts or whatnot. Have you seen anything in the industry right now that a novice like me, who's got money burning a hole in his pocket, I don't really, but that's looking to get into this industry, looking to invest? I think potentially buying a multi-unit office building is the answer. What do I need to look out for if I see what's predatory? What are the red flags? What do I need to run for the hills on?
So the first, we'll roll into the building, right? And the risk and rewards in the building. But right now, if someone's offering you seller financing, if someone's offering you a land contract, any of these terms, that's predatory, right? So right now, if you can go to a bank, you can get a loan at sub 4%. Okay. Phenomenal rate. If you have wondrous credit, you might even be able to do it 2.75. And it's very easy to get money for a building if you are qualified, right? You walk into a bank, most likely they're going to say, here you go, the building works. We're seeing a lot of people offer seller financing. They're offering land contracts at much higher terms to novice buyers because novice buyers don't know. Historically, land contracts were the gem in 2010. They saved people's butts because the bank would not lend. These land contracts, they're at 6, 7, 8%, right? You're losing 5% the day you sign on the dotted line. And a lot of these, now again, this isn't everybody. We have some people with good hearts, and there's other good reasons for this, right?
Sure.
It's a good tax play, right? If you don't want to get taxed, do a land contract. You can pay a little bit over time, not all at once. But we're putting these good people aside, okay? We're talking about the bad. The other thing they want you to do,
something to be weary of and to
Yeah.
ask some very serious questions about if you see that.
Yeah, because what happens with this land contract is it's very easy to, it's not the right word anymore, but foreclose on your buyer. There are a couple individuals in the Milwaukee, Wisconsin area that love land contracts because they take your money and they hope you forget to pay. So they take your building back and they do it again and again and again.
Yikes.
And it's completely
Sounds
legal.
awful.
They're not doing anything wrong, but they're actually hoping you fail to pay.
Well, that's not very nice.
Right.
What else is out there? Is there anything else? Any other red flags?
Yeah. Tenant terms, right? So a lot of owners understand. So right now, if you own, it's the time to sell. If you have somewhere to place your money, get rid of your property, right? Sell, sell, sell. It's very tough to buy. But what's happening is a lot of owners are trying to sell their 2, 3, 4, 5 tenant buildings, whether it's office, industrial, it doesn't matter, with 1 or 2 years of lease term left. What happens when that tenant goes? Will we have the same demand that we have now in 2 or 3 years when you have to refinance?
Right.
If you are a big company on the East Coast, it doesn't matter, right? It's $1 billion portfolio. What's one small building here do? But if you're you and me, a $500,000 building is possibly more than our house, right? It's more than our house, our car, and our college debt. So if that tenant leaves, you can lose everything. And they could leave in a year. So you need to pay a ton of attention to the lease terms and what is left. If you don't have 3 to 5 years left on that lease, you're really putting yourself at a disadvantage compared to the rest of the market.
And so what happens if you find a property that you think is perfect, great fit for you, your organization, what you want to do with it? You think it's a good investment, but it has 3 tenants and they all have 1 year left on their lease. Are you making an informed decision to accept the risk, or is there something you can do to avoid that uncertainty?
Good question. It really depends, right? So let's say I can find, I'm going to go back to industrial, right? Because it's near and dear to my heart. If I find an industrial building in New Berlin, right? Everyone listen, New Berlin, it's one of the best markets we have. And it's still affordable. If you can go to New Berlin, you find a 4-tenant building and it's under market, and any broker in the state of Wisconsin can help you understand if it's under market, buy it, right? Because you're going to lease that building up a month after vacancy.
Right.
But if you're paying over market, which a lot of people have to for investment, you're toast. And every single submarket has a different value. Menominee Falls has a different value than New Berlin. Fond du Lac has a different value than Pewaukee for what you can pay dollar per square foot. And most brokers, you can call anyone, you can call us, we're Newmark, Collier, CBRE, it doesn't matter. You call them and they can tell you the dollar per square foot in these regions and they can help you buy it. But if you can buy an undervalued building, you do it. Because you will find tenants in these good markets without a question.
And undervalued anything? Storefront, multi-unit, office, industrial?
Sure. Good question. Apartments and industrial, anything under market, we're selling instantly, right? It's our job to try and put it over market, but we still have certain clients that we're able to find stuff under market for them. Office, you got to be careful because it might be under market, but you better build into your package a year of payments to cover the debt before you find a tenant. Retail, that's really up to you, right? Retail is a phenomenal investment, but if your base sizes are wrong, if you're not deep enough, if you don't have a stoplight in front of you, you have a lot of risks to mitigate. I would never recommend a first-time buyer gets into retail, but once you've had 3, 4, 5 of them, dive into it.
There you go. So you're talking basically, if you're a beginner, it would probably behoove you to stick to investing in industrial or multi-unit residential.
Yeah, beginner buy multi-unit residential.
Okay.
It's very hard. It's possible. It's very hard to go wrong. Why? Because everybody needs a roof.
Right.
And if you buy these things right, 3/4 of your payment, just because values have increased, 3/4 of your payment is, I'm sorry, I'm saying this wrong. So if you buy a duplex correct, right?
Mm-hmm.
One unit almost pays for your mortgage and taxes, and the other
Right.
unit is almost profit, not quite. So you can afford to have vacancies in these things. And all you have to do is lower the price. If you're in New Berlin and you want $2,000 a month for rent, lower it to 1,000. You're going to find somebody. So you can real quickly offset your losses in apartments.
Sure.
In a retail setting, someone might not want to make subs in that building, right? In the manufacturing building, there might not be a screw manufacturer looking. So you have challenges, but you can always put somebody under a roof. It just might be cheaper.
So if you want to have a multi-unit residential, let's say triplex,
yep,
why not? Could be a good investment. However, less profit margin if you use a management company, more profit margin, but more work if you don't.
Yep.
For a beginner, do you have any thoughts on where you would steer somebody, or is it just a matter of personal preference?
Personal preference. I can tell you, my wife and some partners, we have a handful of residential units. We up to what I call 10 doors, whether it's duplexes, threeplexes, fourplexes, it doesn't matter. Once we had 10 doors, we could handle it up to 10 doors.
Okay.
We lost money from 10 doors to 30 doors. And now at over 30 doors, you have economies of scale where you can start hiring people and you can make money again.
Right.
So up to 10 doors, I highly recommend, if you have your handy, whatever it is, you try and do it on your own. Okay. After 10 doors, it gets to be too much. Your washer goes, you have 2 fridges that go at the same time. Now you have a roof that went, you can't keep up to it.
Right. Interesting.
Yeah, but that's what we found, and we're good at it, right? And once we got to 10 doors, we had absolute challenges.
So if I buy a 10-door property apartment right now, soup it up, put lipstick on a pig, make it pretty, fix what needs to get fixed, and start renting it out, is that, like, for me as a property manager, is that like a full-time responsibility?
No, today's world's gotten so good. Perfect example, us, we don't even talk to our tenants anymore. We have an application that was free. They click a button when they have an issue and it emails us. They click a button and it sends us their rent. It's phenomenal being a landlord today versus I used to run apartments to pay for college 15, 20 years ago, right? So it is not a full-time job for you.
Okay.
You could handle as an individual without being a full-time job, maybe up to 20 doors. It gets super challenging though, and then it really does. You start losing your nights and your weekends. But up to 8, 10 doors, all it is a side job.
How do you like that? Interesting. But again, no chance right now in buying a vacant apartment. Like, I live in Greendale right now. If a vacant apartment complex or duplex popped up, if I'm not putting 50 over asking, like, sight unseen, it's not happening. Like, everything is getting gobbled up immediately. So if I don't have a solid nest egg to dive into this, I need to be saving my money instead of daydreaming about something I can't afford.
Or partnering, right? Banks have gotten really good at it. So think about this. A 4-family on the high side is at $400,000 to $500,000, right? So let's just say $500,000. What if you have 5 guys, right? You each own, or 4 guys, you each own a door, right? That's a wonderful way to get into it as you build equity. Now you buy your next one. The bank sees that you have this asset. You built up equity. Every time you own a property up to a point, it gets easier and easier to buy your next one.
Right. Ooh,
Partner up with friends you can trust, or have a ridiculously good LLC agreement written by a very expensive attorney, and you can trust them all day anyways because you got the language backing you.
There you go.
Partner. I have partners on multiple properties as well.
Right on. Well, and again, for everybody that may be watching, not direct financial advice. This is all overarching anecdotal stuff. And if you have questions about this sort of thing, commercial real estate investment, whether it's industrial, residential, multi-unit apartment sort of thing, or commercial or office buildings, it's a huge investment and a big decision. So you need to make sure to consult an expert like Adam directly. What's a good way to get in touch with you if somebody wants to learn more?
Yeah, either my email or text. They can call too, but everyone's texting. Do you want me to just give that now, or do you post it? What works?
Yeah. What's if you want to give out your cell
Yeah,
number?
I'll give it, right?
All right.
I don't mind. It keeps me less lonely. It's 262-613-6096, 262-613-6096.
Excellent. And there it is scrolling across the bottom. Adam, do you have any closing thoughts? Anything we didn't touch on? Anything that you want people to definitely know about this? And I just want to say thanks to Ray Roberts for your topic. I love your picture. I have a circle around my face. That's funny. Appreciate your comment. If anybody else has comments, you got like 10 seconds to throw it in here for us to cover it. But Adam, do you have anything that you'd like to say that we might not have touched on?
Yeah, I absolutely love this topic because you do this right. In 15 years, your stuff's paid off and it's now purely investment, right? You're going to have income coming in every single month that you don't have to work for anymore, right? This is it's a long path to freedom, but you can be on a beach in Hawaii while your tenants are paying you to be there, right? So that's why I love investment real estate.
Not a bad deal. Not a bad deal. Well, good stuff, Adam. I appreciate you today sharing your expertise with us. If anyone wants to follow up with Adam, number scrolling across the bottom there. Adam, I'll ask you to hang on just for a minute here. I'll talk with you afterwards. Man, that was super informative. I learned a lot. I didn't know anything about that going into it, but now I think I have a better understanding, at least someday if I want to own a multi-unit property. Just what kind of an investment that would be financially, personally, of my time and efforts and whatnot. A really interesting topic. That was really, really cool. But that's the Wisconsin Veterans Chamber of Commerce for you, bringing that value every single day. See how I did that? See that segue? That's the real deal right there. Wisconsin Veterans Chamber of Commerce, wiveteranschamber.org. You should check out our website. We're in the process of building a new one, but our old one still has our events on there. And by golly, do we have a lot of big events coming up. Have to tell you all about this. The women veteran owned business recognition and benefit. That's coming up on October 7th. Courtesy of Bank of America and on Milwaukee. Fiserv is hosting our virtual entrepreneurship forum coming up on October 21st, and November 10th is our big annual business conference. We have individual tickets, which are discounted right now for early bird registration. We have exhibitor booths available, and we have a few limited sponsorships left. So if you need anything like that, you just reach out to us. We'll hook you up. But in the meantime, every Wednesday, 11:30 a.m., same time, same place. Friends, I appreciate you tuning in, and we will see you next time.